Welcome to the July 17th, 2023 Advanced Report from McGowanGroup clients and NetWorthRadio.com listeners. I'm Spencer McGowan, your financial weatherman, with your weekly fast-paced tour of the global financial markets using research that a team of 10 experts has put together from our research sources like Bloomberg and others. I'm president of McGowanGroup Wealth Management. We serve affluent families from right here at the Crescent in Dallas, helping coordinate their estate plans with the attorney, the tax planning with the CPA, and of course, the asset management piece. This is designed to help you make great decisions. And the title of this week's program at NetWorthRadio.com, the extended podcast, is Told Ya. And this is one reason you should subscribe. And give me a like or two if you would. Look at this. See this right here? That's called disinflation. When did we start talking about it? Right here on this broadcast. It was August, because July of 2022, the rampant inflation that was present in June actually went to deflation briefly in the month of July 22. It told us that inflation likely subsided, and there were other research pieces that led us to that conclusion. That means that we are right at the crux of something very important in the Fed tightening cycle, and it's called loosening over the next 2.5 years. And I'm going to show you the Fed's own projections for that. That's the don't miss here. We've had 18 months of market torture as the Federal Reserve raises the federal funds overnight bank lending rate, the base rate, cash rates if you will. Money markets are paying 5, and I'll show you why they're likely on their way to 3. So enjoy the 5% while you've got it. They believe from the Volcker thesis that they have to raise interest rates to the equivalent of the trailing 12 months inflation, which fell to 3 from a high of 9. And each month here, we were telling you what it looked like after the big inflation month of June. So this research broadcast was saying, whoa, wait a second. All you're hearing is inflation, but if you look at the monthly data stream, we were 2.5% inflation all during this period, and sometimes less. Wow, that's huge. People were still complaining about the price of eggs. Eggs had their biggest drop, by the way. Rents started to come down just recently, and we put that up here a couple of weeks ago. So this intelligence source tells you something about the next 2.5 years you don't want to miss. And consequently, on this announcement, Dow Jones Industrial Average goes over 34,500. One reason is earnings. Airlines and banks blew the lid off the cover. Over 50% gains in the net income for JP Morgan and Wells Fargo, and they make up a big component of the S&P 500 companies. All right, now you heard about the looming recession, right? The recession was looming. We were going to descend into ugly recession because the Fed was tightening. That happened in the late 70s under the Volcker thesis. Well, what happened? Surprise! GDP in the second quarter projected to be 2.3%. That's real economic growth right now by the Atlanta Fed, and they gather the data every week. This was the consensus estimate. That's a recession predicted at the first of the quarter. Didn't happen for the fourth or fifth quarter in a row. Predictions of a recession. Then GDP came in at about 2%. What happens at 2.3%? When producer prices actually went to near zero? Corporate profits go up. Wow, corporate profits projected to go up over the next 2 years by as much as 30%. Maybe that's too optimistic. Maybe it's 10 or 15. But what's the projection? It's not down. And that is Goldilocks for companies. You got reasonable growth, not too hot, not too cold, and you have their prices coming down, producer prices, even including healthy wage gains. Wow, that sounds like a pretty good economy. Nobody's talking about it. Well, there's an opportunity. Where's the opportunity? Well, oil goes over 76 this week, breaking out of its trading range. Oil and gas is going to play a key part in carbon reduction, believe it or not. And that's in the long broadcast at networthradio.com. Global high yield bonds. You can get yields over 8%, sometimes as cheap as 75 cents on the dollar in a well-managed basket of bonds by somebody who knows how to pick bonds that don't default. Well, if they go back to par as the Fed comes down, that could be a huge gain plus 8, 9, or 10%. Wow, that's the global high yield lending category. And if we add on top of that dividend companies whose earnings are likely to grow, we've got gain potential and rising income that overcomes inflation. You worried about inflation coming back? What usually causes it? Historically, it's always energy prices spiking. Well, what a great hedge. I can get 7% dividends in a great portfolio of oil and gas infrastructure, and that dividend is likely to rise. And I'm buying them at 6 times cash flow. Talk to your real estate experts, and they'll say, man, get all of that you can, because 12 times cash flow is a great price for what? Real estate. Okay, here we go. Change in real GDP. Notice there's no minus signs right here. Okay? No minus signs. They say 1% for this year. That's a little pessimistic because it's already 2.3. 1.1, 1.8, so it's anemic growth projected by the Fed. Unemployment rate doesn't go above 4.5. PCE inflation. I tried to blow this up so we could see it better. I'll do a better job next time. I'm going to ask Preston Lane to just type it out for us in an easy graph. That's good kind of initiative, a suggestion for my trusted engineer here at YouTube McGowan Group. Now, PCE inflation, that's the Fed's preferred measure, trailing 12 months going down to 3%. It already did. Then it goes to 2%. What would the Fed funds rate be then? Oh, it goes from 5.6, that's their current projection, maybe 1 or 2 more increases. Everybody's talking about that. Nobody's talking about what the Fed actually says. That's why you YouTube McGowan Group. Now look at this. It goes to 3.4%. Then it goes to 2.5%. Every time they lower rates, because they're already too high based on inflation, that is likely good news for the value of well-chosen high cash flow assets. That's our specialty at McGowan Group. That's why you go to networthradio.com, click contact us, set your time for a brainstorming session, because we're really good at doing financial plans for families that carry us through decades, as opposed to just looking at the next month or two. Here we go. Look at this. This is a breakout. Oil breaking out of a trading range that lasted all the way from the end of April. This was the big banking collapse. This was Federal Reserve going to cause a recession, and it didn't happen. You're entering potential short supply of oil and gas based upon the figures from 3 sources that we use. That is a golden opportunity to get your inflation hedge plugged in place. I'm Spencer McGowan, President, McGowan Group. Thank you for joining us for today's YouTube McGowan Group. Thank you for tuning in to Net Worth Media today and our efforts over the past 2 decades to educate clients and help clients make great decisions. That's the reason that we're here at YouTube McGowan Group, Apple Podcasts, Net Worth Radio, and networthradio.com. The Net Worth Media effort is designed to help you make great decisions and address value at risk of loss, fluctuation in the markets. Remember, if we talk about a security, doesn't make it a recommendation until you come down and get a plan from McGowan Group Asset Management, the team that cares. You can set a Zoom meeting or an in-office meeting at the Crescent, and we'll give you a written plan that encompasses what we believe to be the best allocations. This is a team of 10 devoted to you. That includes the research that you see each week from Reuters, from Bloomberg, and from the best sources. We always post links at networthradio.com for what we believe can help you make great decisions, the research that comes up. Now, the net worth media effort is also designed to address cycles in the market, value at risk of loss. At networthradio.com, you can get the ADV form that shows, yes, we're a fiduciary, a registered investment advisor. It covers the costs of hiring our team to help you in the future ahead. It really helps to have an expert team on your side that you can reach by phone, email, and of course, a team that's here for you every week to address what's going on in the markets, because anxiety can often lead investors to make decisions that are either dangerous, chasing things, or selling things when they shouldn't. And that's a big part of our planning effort at McGowan Group Asset Management. Thank you for tuning in, and we look forward to serving you and your family in the years ahead.